What's up, everyone? I want to review some trades that I took this week, along with some trades that we took in my Discord. I'm also going to go over some momentum type of trades and playing breakouts to a certain extent while adapting to what the market is currently giving us. So there's going to be a lot of visual lessons in this from setups that we took so we can learn from and better our future trades. If you're new here, be sure to hit that subscribe button, drop a like on this video, and if you want a very good trading resource, I'm going to link my Instagram in the description below at Investotrade. I post daily trading recaps on here along with very good trading tips and tricks. The link to this will be in the description below. You're definitely missing out if you aren't following it. Now, let's get right into the video. First thing I want to go over is Tesla from the pre-market plan. I post these every single day in the Discord. This was a momentum type of play. We were gapping up 10 bucks, and I'm sure all of you know how well Tesla moves once she builds some steam. So we had resistance around 634 to 636. A key level resistance support is different than supply or demand. But once we got above this resistance at 634 to 36, all doors were open for a rally into the 643 supply zone. And even better, we had supply at 665. Price and volume will be the key signs today. I would love to see volume and momentum build, and I'm looking to play Tesla calls into these levels. So the one thing I do want to say is I like giving my key levels a general area, and I like to see how price reacts to that before I place a trade. Now, for all you guys that know me, I really do not like playing the open. However, something that I have been seeing, this goes into reviewing and logging the current market conditions. One thing that I have been seeing a lot this week is a lot of stocks have been just ripping out of the gate or slowing down maybe in the first 5 or 10 minutes and then, moving up fast without really pulling back into demand. So as a trader, I have to adapt to what the market's currently giving me. I saw this on a different setup, I think earlier in the week or last week. So we were watching a break above a key level. And then once we got above the key level, there was essentially nothing stopping us from rallying into supply. It's kind of like the white noise on the chart that once we're above it, you got nothing else there until no other roadblocks until we get to the nearest supply zone. So Tesla opened up. We had very nice volume. One thing I want to note is if you were to look at the chart, usually 90% of the time, the highest volume bar of the day is at the open. So you really can't compare the first volume bar. However, just going back and looking at other different time frames, let's go to a 5-minute. You could see that the first 5-minute bar was completely significant compared to what we saw yesterday and a couple days prior. So the market opened up and the first 5 minutes had extremely high volume. It was very volatile. And if you're watching the speed of the tape or how fast the orders are coming through, it will also help with volatility. As I said from the pre-market plan, price and volume will be key signs of this. The market opened up. We rallied above 636, and at the 931 candle, I did take the Tesla 640 calls at this candle right here. My stop was below 634, 635, depending on how price reacted, if it did sell off. And again, this is a risk-free type of trade because immediately it started pushing up. My contracts gained about $1 very fast. We consolidated. I'm cool with seeing consolidation periods. You all know that consolidation is good as long as there's intention to the up or downside, depending on the direction you're looking to play. And then boom, another quick push. And at this point, because there were so many eyes on Tesla, there were so many people watching the breakouts, I personally like to sell when other people are buying. That's how I get the best bang for my buck. When majority of retail traders are buying into a crazy extended move, I like selling into them, putting a limit order high up that maybe somebody that has a late FOMO entry and is chasing it will essentially hit my order passively that I'm sitting on the offer. So the 936 candle, I got out of this position. I knew a lot of people were going to be chasing this 1-minute high at daybreak, and especially that we were about $1 or $2 away from supply. I was happy with my profits, and it was a quick 5-minute trade that I got about 30% on the contracts. I'm not going to complain about it. This is not deviating away from how I trade. It's just doing something a little different. And when I do things a little different, I have to play even more conservatively. That's why I took profits off the table. I respected my risk. I followed my plan and I did what I have to do. I can't look back and see that this thing completely rallied and I could have made 300% of my contracts because one, that's going to mentally mess me up. And two, it's going to affect my future decisions because I'm going to get greedy and want to make crazy gains because I saw how much I could have made if I held for another, 15 or 20 minutes. So the point I'm trying to make here is after you take your profits, you respect your plan. Don't look back at what you could have done and how much you could have made. Brush it off and focus on the next best setup. If you whine and complain about how much money you could have made or how much money you left on the table, I guarantee you're going to lose on the next trade and it's mentally going to mess you up. Eventually, this did consolidate above VWAP. If you see my last Instagram post or one of my few last Instagram posts, this is FOMO hour. We're consolidating in a tight range. People that missed this breakout early in the morning are going to have FOMO and want to get a long entry up here when the conditions are really not in their favor. And we just pretty much, consolidated all afternoon and then gapped up the next day. But the point I'm trying to make here is when you're playing momentum breaks, you always need price, volume, volatility to dictate the type of momentum. When you're scalping, when you're playing breakouts, breakdowns, you need momentum to trade or else you're going to get faked out and you're going to take a losing trade. When there's momentum, there's other participants in the market and it's very hard for you to get faked out as much as you would if there was not momentum into the market. For those that seen the new videos that I added to the course, this kind of supplements it, but price, volume, and volatility will dictate that momentum that we need. You always need to look at volume and volatility. I'm extremely worried when I'm looking to put a trade on if there's no volume or volatility. In fact, I don't put a trade on if there isn't any of those things. So I always need to see that. And this will dictate the strength of the breakout. If I'm playing breakouts or breakdowns, anticipating or speculating that demand or supply will trigger, as that's the last roadblock that's going to stop us, I need to see momentum build for me to enter the market. Now, one thing I do want to say as well is to pick levels and see what the market does to those levels. You need to be reactive. A lot of people say, oh, I'm going to long Tesla once it goes above 634. And they do it without seeing how price reacts to it. You have to pick out your levels that you want to be active and you let price and volume dictate when you have to be active. And it's going to give you these signs to be reactive and to put a trade on. So pick your levels. Don't just do once it comes above or below a level. See the reaction at it. And the different conditions are going to present different opportunities. So you always have to adapt, like I just mentioned earlier, as different markets and different volume and volatility conditions are going to present different setups. One thing I forgot to add with Tesla is on Monday, we bounced off of this demand zone at 610. So we had buyers factored in. Nice rally off of that for those that caught that move. Then on Tuesday, we consolidated, made a little move higher. And then on the breakout day, we gapped up 10 points and the volume was key. Now on a stock like Netflix, which presented a very similar opportunity, but did not play out as well, we also bounced off of demand on Monday, had a nice move off of that on Tuesday. And then Thursday, from the pre-market plan, what we were watching were for a breakout above the 519 to 520 area with strong volume and momentum, just like we saw with Tesla yesterday. I would be watching to scalp calls here. Another reason why I like this was from the past price action earlier in the week. We had very strong volume building. And I said that this is really going to be dependent on how price reacts. Just like what I said before at the PowerPoint slide. You don't want to get caught up in a fake out. However, once we're above the 519 to 520, we have a lot of room to move higher. Now, this played out just like Tesla, but I did not take this trade because I was reactive enough to see the different conditions that the market was giving me. So on a 5-minute chart, we really do not have any significant volume. In fact, we were very choppy. And if you go to a 1-minute to drill down what I saw, like I mentioned earlier, the first bar is always going to have the highest volume. But once that second candle opened and we moved above 520, where theoretically I said to play above 519 to 520, but if you listen to my advice and understand how I trade, you don't get long above a certain level. You need to wait for price and volume to confirm it and say that we're agreeing once we are above 520. Nothing about this move agreed above 520. and volume was drying out. Momentum just wasn't there after that 1 minute chart, and price sold off. So not only did it help me avoid a losing trade, but I took this off my watch list after the first 15 minutes once this thing started playing games, and it lost complete volume, it lost momentum, and as you can see, it was worth it because this did nothing but chop sideways. So the point I'm trying to make with this is the setup was very similar with Tesla, but because I was reactive enough to the conditions, I didn't just play above 520. But if we did move above 520 and volume was building, I would have had no problem taking this trade, but I saw very unconvincing signs and it helped me avoid this trade. Going back to Wednesday, the pre-market plan on the S&P 500, you all know this is my favorite instrument to trade, was we had demand at 4229 and a half, and we also had a not so convincing supply zone at 4245 and 3/4. We were hoping for some volume and volatility to come in today. So looking at this chart, and now going back in hindsight and reviewing it, I do notice, I didn't see this in real time, but would have served as extra confirmation. A head and shoulders pattern at a supply zone. So here we have the left shoulder, here we have the head, and then here's the right shoulder, would have gave us extra confirmation at the supply zone. Eventually we did sell off. We missed demand by about a point or so, but these are the conditions where volume kind of lacks and is extremely balanced. Something similar to what we saw on Friday. So overnight we hugged VWAP. We're above the supply zone, it becomes invalid. Right next to all-time highs, we had the 4253 supply zone, and pretty much all day on Thursday, we were very flat and choppy, very balanced, similar to what we saw on Wednesday, and these are the FOMO conditions that you have to avoid. This is kind of going back to the avoidable losses, where you're going to force stuff because of FOMO, and you're going to force stuff in conditions where the market really isn't in your favor. So very flat, we moved in a 9-point range for the S&P. While we're at all-time highs. So not a good sign. Let's see what tomorrow brings, but very balanced. These are the type of conditions that you want to play a little reserved, less size, be selective on your setups, and wait for volume to build. Good way to end the week. Here are some messages that I've received from members. I appreciate all the feedback, and I'm glad everyone's learning and seeing a major improvement in their trading. This member, nice $841 profit. Couldn't be happier with the results. Trading is all about scalability. If you make this profit with 5 contracts, nothing's stopping you from making 10 times this profit just by increasing your size. This member is much more consistent. Small gains add up, believe me. Base hits will pay. Trading with the community is a must when learning. Thank you for teaching your skills. Supply and demand has helped a lot with swing trading and day trading. Nice $1,800 profit on here. Again, with any strategy, you could use it as a core and branch out, especially with supply and demand, to figure out how it works best with your personality and your style. This member can't thank me enough. The course has seriously changed his life. He made more than he would have at 2 months at his job. Nice $5,000 profit. Love trading with you guys. Nice $800 profit off of a $6,000 account. Nice words from our Morgan. This member used to work on Wall Street. He makes some serious gains. This is a nice $7,000 gain on SPY. He's got a bunch of other swing trades that netted him $39,000 in profits. But that day for 2 day trades, he netted a little under $7,000. And my boy JP started with a $1,000 account last week. It's up to $3,300. Made $1,600 today on these names. Very nice, very important to find consistency because like I said, you could go a small account, you could go a large account. Just respect your risk. You notice how his losers are extremely small compared to his winners. That's what you need for consistency, and that's what you need for growing an account because it shows you practice proper risk management. Then on Friday, nothing really eventful. Our demand zone, it was kind of questionable on the S&P 500 at 4260 and 3/4. Was the low of today. We bottom ticked it. I did not take a trade off of this due to the underlying conditions. However, this demand zone at the low triggered to the exact penny, and we did bounce, but these are the balancing conditions. Just like the day prior where you really want to sit sidelined and be a little conservative. We did hug VWAP and bounce at it every time we came and tested it, but nothing really eventful to go over and learn on this. So I think I'm going to end the video here. If you did learn something, you did enjoy, hit that like button for me. I would appreciate it. Follow me on Instagram. And if you really want to learn more, definitely check out the links in the description below. I offer a very in-depth and educational course that comes with access to the chat room and no extra cost. I just added recently videos to the course, and I don't think prices are going to stay this low for much longer. So definitely take advantage. But besides that, peace out.